Hey everyone, welcome back to Republic Labs. It's David here. Today we'll be talking about quite some big news. We have the new NYSE trading platform. We'll talk about Bitcoin on-chain analysis. We'll talk about Monad statistics, and the trenches are also heating up. We'll talk about Solana Launchpad, meme coin wars, and also, lastly, the Clarity Act update. Let's go. So the big news of the week is NYSE just announced the development of a tokenized securities platform with 24/7 operations, on-chain settlement, and stablecoin-based funding. Its design combines the NYSE Pillar matching engine with blockchain-based post-trade systems. This is the interesting sentence, including the capability to support multiple chains for settlement and custody, which suggests that trades are executed off-chain and settled on-chain, similar to Polymarket's order book. Multiple chains for custody is a no-brainer, but not sure how multi-chain trade settlement would work with off-chain matching. And there are a couple of comments on Twitter with people feeling bullish or bearish about this announcement, but overall, real-world tokenization came much faster with 24/7 trading. That means weekend pre-discovery. That means weekend price discovery, though weekend liquidity has been thin and low signal. But we can see that this would solve Oracle problem with equity perps hopefully expanding with more volumes dramatically, and maybe fractional shares are also possible, or a huge unlock for retail to make more money when the professionals go to bed every night. Overall, won't translate to positive crypto price actions immediately, but perhaps long term. People don't trade equities because they are 24/7 on crypto, and they do it because of leverage or regulatory arbitrage or just convenience. And so what do you all think? Do you feel bullish or bearish about this NYSE new trading platform announcement? The ETFs had their first major inflow week since the October all-time high, seeing $1.4 billion in inflows. Whilst one big inflow week is not yet a trend, it is certainly heading in the right direction. And the inflow is supported by a very large $21.8 billion in trade volume, a good sign that an asset isn't dead. And if the next couple of weeks elevate ETF volume, it adds more weight to Bitcoin demand. And sell-side pressure, if we look from long-term holders, continues dropping, now at $1 billion per day and less than a third of where it was in November. The marginal sell-side supply is declining quickly, whilst the marginal demand from two of the largest Bitcoin demand, which are ETFs and Michael Saylor's strategy, looks set to increase. And so I don't think we can confidently say the bearish pressures have been overcome just yet, but there is a clear balance of evidence starting to favor the bull case for Bitcoin. I like the direction I'm seeing playing out in the supply being lower and demand being higher, balancing out at this stage. The NYSE's new fintech program, Taking Stock, showcases the trading floor and explores financial and technology trends, and with a reach of tens of millions, its January 13 episode featured the Monad co-founder Yuni Skiata discussing stablecoins and crypto. In the ever-noisy world of crypto, where projects vie for attention through viral marketing and fleeting trends, Monad takes a different path. The focus isn't about immediate hype. Monad ecosystem metrics reflect sustainable approach and creating compounding value that builds momentum over time. Steady increases in TVL, transaction volumes, and adoption, and total deposits if we see on DeFi Llama in the Monad DeFi ecosystem getting close to $500 million, and up 75% since last month, with biggest gainers from DeFi apps like Neverland, Accountable, PancakeSwap, Capricorn, Morpho, and Gbox. Monad community and culture actually make SocialFi and prediction markets possible, and prediction markets are becoming consumer products nowadays, and people can trade, probably they want to trade culture in real time. And Trendle is starting a new consumer era with liquid attention markets now live on Monad. It's a cool experiment where you can trade people, events, internet moments. Trendle tracks the world's attention and turns it into trading opportunities. And you can find a topic the world is buzzing about. You can trade up if you think it grows, down if you think it fades, and you can boost with leverage if you want small wins turn into big gains. And if you're interested to ride the hottest narratives before everyone else, check out Trendle. With closed beta, you need an invite code, so you can just go to their page and fill the interest form. Solana trenches are hot, and here are the stats for the last few days. We're seeing tons of volume moving around right now. Daily graduates up an amount of new wallets reaching numbers we haven't seen since January 2025, and daily active wallets on Pump Fund have doubled in the last week. And the delta between sentiment and fundamentals, plus the growth potential from Pump Fund expansion plans, creates the setup for a pump-hated rally. And if Pump Fund executes with meaningful airdrop and genuine revenue sharing, they could flip the narrative overnight, and those who have called them extractive might suddenly realize they have been rewarded handsomely for their past usage, while now owning a piece of the business's future revenue indirectly. That said, the risks and challenges ahead are substantial. Retaining business strength in a prolonged weak market while expanding to mainstream audiences present execution challenges, regulatory scrutiny, and competitive pressures add additional uncertainty, as do longer-term token supply dynamics and limited flexibility around buyback commitments given they have previous investors and aren't like hyperliquid. The Clarity Act is a bill introduced in 2025 to bring regulatory clarity in crypto, and the Senate Banking Committee's vote on the bill was supposed to happen already, so there was a lot of optimism. Many people like Bitwise CIO Matt Hogan pointed out that it was a bullish catalyst, but the draft from the Senate committee completely shifts the mood, and some provisions were problematic for crypto users. Tokenized securities would have several restrictions. The bill bans stablecoins from giving yield or reward to users, and this is a move to protect TradFi banks. DeFi apps will have restrictions as well, and most are worried about surveillance invading privacy. And due to these concerns, the committee's vote was postponed and many amendments have already been filed. I'm not a lawyer or an expert on securities laws, so I can't opine about the bill, but many crypto lawyers said this bill was notably worse than the House version. And Coinbase publicly came out against the bill on January 15th, the same day that BTC peaked. So we can assume the bearish sentiment on the bill affected the market as well. To be fair, the bill had its supporters. Kraken, Circle, Ripple, Andreessen Horowitz, and Coin Center were in favor. And at the end of the day, it's controversial. Some believe this is the legitimate way to integrate crypto into TradFi. Others believe this bill is designed to protect big institutions and stifle decentralized protocols. So let me know what you think about this video. If you liked the video, don't forget to give it a thumbs up and don't forget to subscribe so you don't miss out on future Republic Labs episodes. Thanks for watching, guys. See you in the next one. Cheers.